Today, I want to talk about how Citadel quite literally cancelled the previous AMC run-ups by cancelling our share purchase orders back in January of 2021, June of 2021, and again in August of 2022 when APE was released. But I also want to talk about how this time round is different and how Citadel will have to pay up. So stay tuned and let's make some money. And now I'm going to dive straight in with the key information. So, Randall Cornet tweeted saying, so you're telling me that Citadel cancelled 600 million plus of our orders in the June all-time high run-up for AMC. That's 40% plus. He said the execution reporting tool should be up and running today for all of you to play with. Matt and Randall Cornet himself have been working their asses off on it. So this screenshot shows the execution reporting tool that Matt and Randall have created for the end of the calendar month of June of 2021. So this data shows that Citadel specifically cancelled 648 million shares worth of buy orders across the month of June alone. Obviously this data doesn't include other market makers like Virtue, G2 Execution and everybody else. This is just specifically for Citadel. This is basically showing that Citadel cancelled 40% of all buy orders across the month of June. And when you factor in Virtue and G2 and everybody else on top of that, we could potentially have seen 50 or even 60% of all buy orders being cancelled. Citadel obviously knew that AMC was spiralling out of control and they couldn't obviously control it and they couldn't keep the share price down. So what did they decide to do? Cancel those buy orders. Not only did Robinhood turn off the buy button, but it even seems that Citadel themselves were cancelling orders that the brokers had been placing. Again, that's a potential 648 million shares worth of buying pressure that we potentially lost out on during the month of June. As Randall tweeted, he said he forgot to mention, but this data is just for Citadel, but he is uploading the Virtue data as we speak. And he also followed up by tweeting saying, and this is where everything starts getting interesting. The original January run-up days only had 28% of buy orders being cancelled. And he said historically it looks like it's the lowest percentage month. Something changed and this is Citadel and Virtue combined. So back in January of 2021 for Citadel and Virtue combined, they only cancelled 511 million shares worth of buy orders, which is 28.75%. Now obviously I say only because that is a smaller number than 600 million, but still 500 million shares is a ridiculous number of shares or a ridiculous number of buy orders to be cancelling. But interestingly, it seems the January run-up was actually slightly less strenuous for Citadel and for Virtue, but it just got more strenuous as time went on. This shows and proves firsthand that Citadel and Virtue and the other market makers are struggling more right now than they were back in January of 2021. And it also shows they've been progressively struggling more and more as time has gone on. So even though January was a big problem for these market makers, it seems like June was an even bigger problem for those market makers as they had to cancel more orders. But on top of that, Saint Snap has also done some of his own due diligence and said he's added the percentage of cancelled shares and ran the data for August to November in 2022. He said in August, the month APE went live, 42% of all AMC and APE orders were cancelled before execution, the third highest for all for the month. And the APE and AMC were consistently among the highest number of stocks or the highest number of orders that were being cancelled. So if we look specifically for August 2022, we can see that AMC and APE had some of the largest number of buy orders cancelled out of the entire market. Also guys, just a quick one, be sure to subscribe to the channel, drop a like down below and ding that notification bell, because that way you'll be alerted when I upload a new video. In August of 2022 when APE was released, 180 million out of 435 million shares worth of buy orders were cancelled. And it's also very interesting to see the number of stocks that have the most cancelled orders are stocks like Bed Bath & Beyond, AMC, APE, AMC on its own, AMD, MULN, and a number of other meme stocks. You may say, Tom, where's GameStop? But don't forget, earlier in 2022, before GameStop had issued their share dividend, the float for GameStop was a lot smaller. And therefore, while there are 435 million shares worth of buy orders going through for the month of August for AMC and APE, that number for GameStop was likely much smaller. Therefore, they couldn't cancel 180 million shares in GameStop because there wasn't 180 million shares traded, as the float was much smaller and the share price was much higher. But obviously Bed Bath & Beyond and AMC and APE have much larger floats, and therefore there's many more shares that could be and were cancelled. But again, it's crazy to see that consistently Citadel are cancelling pretty much half of all buy orders for AMC, APE, and I imagine for GameStop as well. And as I said, it's crazy to see this is getting worse and worse as time goes on. Back in January of 2021, Citadel cancelled 28% of all orders. In June of 2021, that number was 40%, but in August of 2022, that number had increased to 42%. Citadel is progressively cancelling more buy orders for AMC and APE as time goes on because they're struggling more and more every single month and every single day. That's why it really confuses me when some of you question and say, Tom, surely we're further away from the squeeze now than we were back in June of 2021. But actually this data proves that if anything, we're in fact closer. Citadel is panicking more and is cancelling more orders. However, I do believe this time, specifically with Bed Bath & Beyond, is very, very different because there's a huge number of Bed Bath & Beyond orders that actually went through last week. Justin tweeted saying Friday produced a 68 million share purchasing requirement for options dealers on Bed Bath & Beyond. Based on the current trading volume for Bed Bath & Beyond and based on the current options trading and the IV increases and decreases, there's a hedge requirement of 68.5 million shares. And it says here the hedging amount table is the total hedging accrued in the given trading day. Therefore, for Friday, the hedge requirement was for these market makers to purchase 68 million Bed Bath & Beyond shares. Now, obviously, it does depend on whether these market makers do actually hedge and purchase these shares to obviously cover their call options, or whether they sit there and hold those naked calls and those naked puts. But as Ameritrade GME tweeted, he said, Bed Bath & Beyond call holders, you can deliver the killing blow by exercising your calls. Obviously, if you exercise these calls, it gives these market makers no choice but to purchase real underlying shares to give directly to you. Even if they chose not to hedge and hold naked options, when you exercise, they have to go into the market and buy those shares. And that's why Ameritrade GME said to exercise your calls, because at these prices it should be very affordable. But he did say to watch out for a rug pull attempt, but if you exercise your calls, the price will go up next week. And then he said Bed Bath & Beyond can light the fuse for GameStop and for AMC. Obviously, Bed Bath & Beyond, GameStop and AMC are very heavily correlated and often rise and fall at the same times. And therefore, if option holders do exercise their call options on Bed Bath & Beyond, it could very much cause the squeeze or cause a run-up in GameStop and AMC. Obviously, exercising those options would force the market makers to go into the market and buy up potentially hundreds of millions of shares, if not at least 68 million shares, causing the price to go up. And obviously, if the prices on Bed Bath & Beyond, GameStop and AMC rise too high, it will force these shorts to close out of their positions. Now, on top of that, Unusual Wells tweeted saying that Brett Harrison, the former head of FTX US, has made a long thread regarding FTX US and his time there. Now, Unusual Wells tweeted saying that in December, Unusual Wells spoke to Sam Bankman-Fried, where he said that tokenized shares of AMC and GameStop were backed 1-to-1. Now, obviously, I spoke about that a lot at the time back in December, but interestingly, Unusual Wells has also said here's a video of Brett saying the exact same thing from September from the AMA with Reddit. So it wasn't just the unknowing Sam Bankman-Fried confirming that tokenized stocks were backed 1-to-1, Brett Harrison also confirmed the exact same thing. Brett Harrison was very aware of exactly what was going on at FTX and very aware of exactly what he was doing at FTX as well. And Brett is saying that shares of AMC and GameStop were indeed backed 1-to-1 at all times by a German broker, which I assume is CM Equity.
Okay. Can the collateral shares for the tokenized securities for GME be held with a transfer agent rather than a broker?
Right. So the tokenized stocks offering, just to kind of get into that a little bit. So that's only offered on ftx.com. It's only for international users, not US users. And there is a tokenized stock offering there, which is backed by a regulated German broker dealer. And those are fully collateralized tokens. So, for every, one token of, GME share, there's of GME token, there's, a GME share in that German broker dealer, and people can trade those back and forth. Trading that token back and forth does not change the location of that stock. It's always with the broker dealer.
So right there, Brett Harrison confirmed that even if you trade these AMC and GameStop tokens, the location of the share doesn't change and it's always held with that broker in Germany. Basically saying that whether we buy or sell or trade these tokens, CM Equity was supposedly always holding shares on a 1-to-1 basis. Again, just proving that these market makers were creating synthetic shares and using these shares held by CM Equity as false locates. But specifically in terms of the reverse split, Stephanie contacted her broker, TD Ameritrade, to ask about the reverse split and the QSIP change. They said if it's a legit covered short, aka a short where they've actually located a real AMC share, then the QSIP number simply automatically switches over to the new QSIP. But if there's a fail to deliver IOU, aka a short where they haven't located a real AMC share, those shorts would need to be closed out. Basically, so that legit short interest of 130 million legitly shorted shares will transfer to the new QSIP number, but any shorts that aren't backed by a real AMC share must be closed out according to TD Ameritrade. And obviously, if there are indeed billions of AMC shares or billions of AMC shorts currently circulating, it would suggest that APE and AMC need tons of shares or need tons of shorts to be closed out. And finally, Jen has also tweeted saying, I think we've got a record high cost to borrow average. She said, I don't recall ever seeing it at 321%. We can see the AMC cost to borrow average at 321%, the max at 327%, and importantly, the minimum at 304%. That means that every single shorter of AMC is currently paying at least 304, if not 305%, to short AMC shares. This isn't just a maximum at 300% and a minimum at, say, 1 or 2%. This is every single shorted share of AMC at 304% at a minimum. That basically means these hedge funds are paying 3 times their overall short position on an annual basis just to continue shorting AMC. They don't have those FTX synthetic shares they can use as false locates. They have this crazily high cost to borrow rate, and it's now been discovered they have illegally been cancelling our buy orders. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.